Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have David McDonough, founder and CEO of Commonstock, to discuss bringing transparency to sharing investing ideas and information online. Certainly a hot topic with the surge in retail trading. David, it's great to have you with us. Welcome to Trade Talks.
Hey, Jill, it's great to be here.
What is the problem with transparency and how the investing community shares information?
The genesis for Commonstock was, especially over the past 5 and 10 years, as retail investing became more prominent, that we needed a lot more transparency and trust and able to learn from people who actually knew what they were doing. So we built Commonstock as a way to amplify the knowledge and the trading insights of the people who are actually very good at investing and trading. And that's where transparency comes in. There's a lot of grifters out there, a lot of people who are gurus, snake oil salesmen. Really wanted to weed those people out and really give a platform to the people who are actually good at this, who I myself wanted to learn from.
Yeah, it's really interesting, David, because we see so many people out there on social platforms. Of course, they bought at the low and sold at the high, but there is no transparency in terms of when they did it. A lot of times I think it's interesting when there's no volume on the tape, and here we have people, shorting and buying at the right levels. So tell us about the solutions that Commonstock provides. How do you provide that transparency?
Yeah, everybody's a winner. Everybody's, sharing their best trade ever. They're not sharing all their losers. And really the losers are the ones that you actually learn from, and that's where you improve. It also obviously, time in market, when did you buy, when did you sell, is critical to understanding how successful someone is and if their strategy actually worked. So the approach that Commonstock built is we're not a brokerage. We are a social layer built on top of every existing brokerage. So the idea behind that was to attract what I call the supply side of knowledge. And those are people that are using all different brokerages, from Robinhood to Interactive Brokers, TD Ameritrade, Fidelity, E-Trade, Coinbase, and built a broker agnostic platform that lets you seamlessly link your brokerage and share when you buy or sell a stock or an option or crypto in real time. Add your commentary, share your portfolio in real time, share your weighting, share your decision-making, add your insights and your rationale, and be able to apply, a performance to your trading behavior, so that we know that if you are constantly not outperforming the market, then your insights might not be as valuable to the community. And we can amplify the people who are actually outperforming the market, making good decisions. Those are the people that we all want to learn from, and they're going to have, they're going to have misses as well. Want to give context, we'll give a platform for them to give context and transparency that, hey, I bought XYZ at IPO and it's down, and here's what I learned from that process, instead of just that never being shared and nobody having the opportunity to learn from it.
Is there some incentive or reward system to keep people sharing their platforms engaged? And I would also imagine that privacy and security have been taken into account as well.
Yeah, absolutely. So security and privacy are really priorities 1 through 9 for the platform. If we've got 10 priorities, and the entire thing doesn't work without users trusting us in terms of privacy and security. The incentive, interestingly, is varied along with the stage of an investor. Some people want to build a following. Some people want to, hopefully get a job in finance, in institutional finance someday, and build a track record. Some people just want to open up to debate and discussion about their decisions so they can improve and learn, right? And so as we see this market correction, the vast majority of people who are creators on the internet are, some of them are economic, want to improve their take-home pay. They eventually want to monetize a subscription business. A lot of them just want to stress test their ideas. And that's where the discussion in the comments, right? When, I've been saving up a lot of cash over the past 2 years that I'm starting to deploy in the current tech downturn correction. And it's great to start buying all of these names that I've been waiting for a good entry point on, and be able to see the discussion in the comments of buying Shopify, buying Square, buying Amazon at a massive discount to the all-time highs. What's the right portfolio balancing? So that's where, for me and for a lot of people, the reason for linking your brokerage is to show your skin in the game, add trust, and provide value to the people who follow you, and also stress test your ideas. And across the spectrum, we have people with $100 million talking to people with $100, those two people both have the same incentive, which is to improve their investing decisions and their frameworks. And that's what that transparency helps encourage.
Yeah, it's so interesting to see platforms being built on community and content creation incentives in this wave of DeFi that we're seeing right now. David, Commonstock raised 25 million in his Series A round. What will that allow the company to do?
So a lot of that's been focused on product, right? And we're still very early in the journey, have barely scratched the surface of the potential here. We've got about 10 billion traded across all the different brokerages linked, and we are about to start. We've focused on the social network aspect of the product and the platform, and we're about to start rolling out a lot of the financial tool aspects that we have been building. And the combination of community and social network, along with the financial tools to help learn your risk score, your average hold time, a lot of the tools that professionals get via Bloomberg or other professional platforms, wanting to give those insights and that data to the Main Street investor.
And to wrap up here, what would a potential Elon Twitter takeover look like, or the recently announced FTX stake in Robinhood? What could that potentially mean for the wider online investing and community landscape?
Oh man, how much time do you have? I think the Elon imbroglio has been fascinating to track. Before starting Commonstock, I worked for 7 years at Google in spam and fraud and policy decision-making. And the short answer is that moderation is way more challenging than anybody gives it credit for. And unlike building rockets and cars, and I bought Tesla at IPO, which you can see on Commonstock, I'm a massive Elon fan for all of his innovations. The laws of physics are very explicit and bounded. The laws of human nature are infinite and make zero sense, and they're a lot more messy to deal with. And so I think I think there's a lot of room for improvement with Twitter. I would love to see a lot more product velocity there, but I think that it's not nearly as black and white as free speech versus censorship. It's a lot more challenging, and there's a lot of nuance. And on Robinhood's front, I continue to think Robinhood's one of the most impactful companies in our generation. I think some of the narrative have turned sour, and I think that the retail world is very fickle, but I bought Robinhood at IPO. I'm a long-term holder. I think Sam and FTX are similarly positioning FTX as a great opportunity in the crypto space. And I think those are two massive opportunities as this demographic of investor, this younger investor starts maturing. Their business will grow along with it. And I think one final thing that's fascinating, we see this narrative that retail is getting crushed by a correction. And there was a great chart shared somewhere that was, people over index on retail buying meme stocks. Our data shows that retail largely buys, Amazon, Google, Apple, FANG stocks, which are all down the exact same amount. So it's not like retail is behaving in any irrational way. They're buying some of the leading technology companies that they use on a daily basis. And when everything goes down, that's, they're not, their portfolios aren't down any more or less than kind of the Nasdaq. So I think there's a mountain made out of a molehill there. And I think this is just a great healthy correction that will, go back up at some point. The question is then when, and I think we'll see the prices of those big companies go up with it.
Yeah, I wouldn't mind 30% price cut appreciation in big names like Microsoft or Apple could be a generational opportunity, to your point. David, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Likewise, Jill, great to have you.